thank you. We now focus on China's economy. It's back in the spotlight the last couple of weeks. The government has announced they will liberalize lending rates, but they left the deposit rates as is. They also announced a mini stimulus package, as some call it, that will benefit the railway industry, and they also announced a tax cut for small businesses. The question is, though, will all this be enough to calm the critics in the markets who are asking for more reforms? And perhaps we'll have to wait for more economic data first. In the next few days, we're expecting Chinese PMI and industrial output numbers, which will be important clues for the economy. Derek Scissors is a research fellow for the Asia Economic Policy at the Heritage Foundation's Asia Studies. He says China just has to take small steps in its interest rate reform.
On the one hand, practically, it's not a big deal at all. It's not going to change lending patterns. It's not going to change the economic trajectory. It's symbolic. It's the People's Bank saying it's going to be tough, but we're going to stick with liberalizing interest rates.
Why do you think they decided to go against moving the deposit rates?
The deposit rate, that is a huge, huge step because it really means open competition among banks. You know, they just did a stress test of the famous incident where rates shot up in June, and banks aren't ready for all-out competition. I think they could have been more aggressive and widened the deposit band, allowed a little more competition on the deposit side. That may be coming soon, but just lifting the restrictions on deposit rates too fast would be chaotic.
I want to get your thoughts on this media stimulus, mini stimulus that the media is calling this, specifically aimed at small businesses that earn less than 20,000 yuan, and also the sort of favoritism towards the rail industry. Both of those announcements came out over the week. How significant is that to the overall recovery in terms of the economy?
Well, it's interesting. They almost seem like they're supposed to balance each other. I love cutting taxes on small business. As we know, small business in China has a huge number of hurdles in front of it. Getting rid of that tax, suspending it, hopefully getting rid of it permanently is a great move. Is it going to turn the whole economy around? No, but it's definitely a step in the right direction. On the other hand, we're going to allow private investment in rail. The government's been saying that for years. Nobody wants to invest in rail. Rail's a mess. It's overinvested. There were huge problems with the Ministry of Railways. That that looks like a complete waste of time. So on the one hand, you have a really good step, and on the one hand, you have something that almost looks like a token step.
This week has been significant because they've taken some big steps, but in the weeks prior, we've had some rough economic news for China's economy. There's been some uncertainty regarding its growth rate going forward. Do you think that mixed economic data puts more and more pressure for the administration to do something faster or to do something right, or both?
Well, I think they're under increasing pressure to do something fast. I hope they don't give in to it. What's happening now in China with the slowdown was expected. It was expected by everyone. It was expected by me years ago. You could, even in the loan stimulus in 2009, you knew this was going to happen. So this isn't a surprise. It's not like there's been a sudden deterioration. If they're really reformers, they have to deal with this and press ahead with reform. So if you get some dramatic announcement, not the mini stimulus is okay, but you get some sort of dramatic announcement, that would be negative for me for China in the long term. This is the period of slowness that you're going to get, and it justifies reform and changing the economic trajectory. If you can't handle it for just a few months, you're not committed the way Li Keqiang said he was committed when he took office.
The Purchasing Managers Index, which we'll get another reading, as well as industrial output in the next few days here, should the government be watching these numbers quite closely because it gives you an indication what's going to happen 3 to 6 months down the road, or should they really just take a step back and focus on the reforms that you're talking about?
I think unless you see something really surprising that then gets verified as correct data, we saw some surprises in the trade data, but they weren't really accurate. Unless the PMI really drops or really rises, the government should just ignore it. It's 1 month's worth of information. And as we said, they're going to be weak months, they're going to be weak indicators. Unless there's a really sharp deterioration, it doesn't really matter. I think the government knows what it's supposed to do. It knows the right things to do, and it shouldn't be distracted by a few numbers in August or September.
Are you worried they're distracted?
It's hard to tell. I mean, we have this problem all over the world. The media is always clamoring. The media used to clamor about how great China's economy was, and I didn't think it was doing so well. Now you get a lot of media clamoring about how weak the Chinese economy is, and I don't think it's that weak. So you can never tell whether it's media coverage or what's really going on inside the heads of policymakers. To now, I think the government has been very patient and wise in not overreacting to data. You just worry that in September or October they'll give in and say, oh, we have to do something, and a little bit of panic will set in.